Hey guys, I hope everybody having a great start to their quarter. I know it's been slow, but if you're managing your risk and you're not forcing things, then I know you're off to a good start. I got something I want to share with you guys today. Hopefully, it can drive home this point that I've been trying to make for a while, and I've talked to a lot of people about this same thing to try to get them to see that this is the type mindset that you don't want to have in trading. And this quote directly relates to that. What my theory is. Whether you're really right or wrong doesn't matter. It's the belief that counts. So how this relates to trading is that it doesn't matter whether the trade works or not. And you should not attach the label right or wrong on a trade based on whether it made money for you or it didn't. Because when you start figuring in right and wrong and you start looking at each individual trade as this trade I was right on this trade, or I was wrong on this trade, none of that matters. What matters to you should be the belief in your strategy or your methodology that you use in order to get to that point. That's what should matter to you. And we all have, all of these strategies, if you really decipher them and really look at them at its basic, at the core, they're all the same damn strategies. People just add their own sauce to the taco and call it, something, whatever they want to call it. It's all the same thing. So there's nothing wrong with the strategies. It's the only thing that, makes a trade a winner or a loser is how well you execute that strategy. And if you're doing it right, over and over again, at the end of the month, you're going to have money in the bank. You may look at in a couple of days and you may have losers every day, but that doesn't mean you're right or you're wrong about the trade. It just means that the trade didn't work in the market. It doesn't matter whether it went forward or backwards. That your strategy or your methodology, whatever you want to call it, that works. Because before you started trading it live, you should have proved to yourself that this strategy works and that it will be slow and it will give you random results. And that's why thinking in probabilities matter. And that's one of the first things that I learned and I kind of employed from Mark Douglas when he was talking about how to look at your trades. Because as human beings, we want to be right all the time. We want to win every time. And if we look at each trade as being a winner or loser or right or wrong, then we take our focus off the big picture and it causes us to do some things that we shouldn't do. Case in point, I did an exercise. I used my family this weekend to do this exercise. And we called it, the coin flip game. So the way it worked, we flip a coin 50 times. All right. If you had to choose before that first flip, you had to choose either heads every time or tails every time. That was your strategy. Your strategy was to not try and guess, but to use the probability of how many times that heads is going to hit versus tails. Now, there's some studies that say because of the weight of the heads that it's going to land on heads more. That's all theory. Okay, but It just depends on, what theories you use to base your strategy on. So hypothetically, I said if we're going to land on heads, we'll use that theory and say, okay, this is our methodology. We're just going to pick heads every time. Or you can pick tails every time. But you can't change. Whatever you have, you stuck with. So he chose heads. And I said every time it lands on heads, you get $2. Every time it lands on tails, you have to give $1 back. You lose $1. So you're risking $1 to win $2. And that's kind of what we do in trading at the very beginning. Now later on in our trading, as we grow and develop, that 2-to-1 becomes almost elementary. But when you're just learning to trade and you're trying to learn how to manage your risk and execute, 2-to-1 is perfect. So he chose heads to start. We flipped the coin, and through each flip, you're just kind of waiting for yours to come out. You've already chosen your strategy. So all you do is you wait to the end to see, how you came out. So in this particular time, this 50 flips, we had 27 tails, which means he lost 27 times. So he had to give $27. So he lost $27. But he won 23 times. So, that's 46. And he only ended up with $19. So the house, which is me, I was playing the tails. So I won $54, and I only had to give back 23. So I won 31. So I won $31, won 19. So the next time you had a choice. It's like you employ your methodology. You start the thing off and you employ your methodology, but you have the option to change this time. If in the middle of the game you don't like the way it's going, you have a choice to change and call it flip for flip. So you had that option, or he had that option. So again, start out with heads. Okay, first flip, tails. Second flip, tails. It goes on. Got to the 7th flip, tails 7 times in a row. So he's down right off the bat, minus $7. Okay, negative $7. What's going to happen to you? Let's say you're in a trade and you're down $700 now, because all 7 trades you took were wrong. I mean, you thought that they were wrong. So all 7 trades didn't make any money. So you're saying that you were wrong in placing those trades. So what's going to happen before the 8th flip? A lot of times what happens, by now we're getting antsy. So here on the 8th flip, he said, no, I'm not going to do this. I'm just going to call it. Because you start thinking, okay, look, I won, won 23 times. So if I could guess right on half of the other ones, so I could win, 33, 38 times, and I can make more money. And then because you felt that you were wrong, your strategy was wrong and it's not working because it didn't give you heads the first 7 times, you change. And you say tails on the next flip. So the 8th flip, bam, heads. And so you're like, no, tails again. It's been tail, it's just going to go back to it. You flip it, bam, heads. heads. The first 12 or 13 ones, the first 13 was wrong. Had he stuck the heads, it would have been almost break even. He'd have only been down by one flip. But instead of sticking to his strategy, he changed it up, and now he's really down. This is what happens to us in our trading. When we start, let's say we start learning a strategy from somebody, and, hey, it starts out right. The first couple of days, it works great. And then all of a sudden, the next 2 weeks, the bottom falls out. It just won't work. And you're like, what's wrong with the strategy? I must be doing something wrong. What's wrong with it? I'm executing it the way you told me, but I'm still losing. So I've got to be, you're thinking that you have to be wrong on your trades, and you start questioning your methodology. And you start losing that confidence in it. And that causes you to start doing things out of character for yourself. It'll start you looking around trying to find somebody else that can help you. And you start putting that right and wrong blame on things, and you change up. Just like in the coin flip game, he changed up, and you end up losing everything. You can't do that in trading. You can't do that. You have to stick it out. You have to learn it. Okay, and you have to trust and believe in your strategy, in your methodology, whatever you use to trade off of. And if you have 4 or 5 or 6 or 7 bad trades in a row, just know at the end of the month, your money is going to be there. That's what I demonstrated. That's what I've been demonstrating live and in color in real time every day for the last 2.5 years. But really 3 years, because I started doing it before I even had a chat room. So, to show you that it's okay to lose. It's okay to go through a losing streak. And it's okay when the market is not there for your strategies. And the stock you picked didn't work, but the other 2 that you didn't pick worked. It's okay. Don't worry about that. Don't place right and wrong. I chose the wrong stock. I know I say that a lot sometimes, that I chose the wrong one. I should have chose that one. But I'm not placing, right and wrong on me. This trade, even though I say it, I don't mean it in that context. It's that this trade just didn't work. These other ones, worked. These would have been the best choices. But we don't know that up front. We just know that if we stay consistent, eventually the market comes back around. Eventually the thing, our strategy starts to do better and work to its peak. And then there are going to be times where it doesn't work at all, or it works, somewhat. You're going to go through all of that. So we just have to be prepared for when these times come, and understand that we're not looking at this small group of trades. We're looking at it over the course of the month. As you see, I don't look at my P&L. The only time I started doing it daily was when I was, opening this community up. Before then, I would just do it at the end of the week. But I really don't focus on it until the end of the month. I want to see where I'm at the end of the month. And, go on from there. So I hope that makes sense. That's why I don't think we need to establish whether something's right or wrong, or whether a trade was right or wrong. That all that matters is, did we have conviction in our strategy? and did we execute it properly? That's what counts. That's the belief that counts. And if we do that, we're going to have less chance of abandoning our strategy midstream and, end up blowing your account up. That's the hardest thing. This is the hardest message that I have to get across to new traders. All right, so let's take a quick look at today. LW was my pick. Every chart was just garbage in terms of how cluttered it was. I did not see any clear path to anything. This chart was probably the best because it gapped up, but it couldn't hold that gap. It just looked weak from day one. It just seemed like it wasn't going to hold the gap. And I felt that we would get a nice sell-off into the conference call. So what I did, we had this huge candle it put in, and we got a little bounce, and we couldn't hold over this level or over the moving averages. So as we came back through and broke the 5-minute open range low and cracked this level, I took it because I felt, this thing is going to be weak, and I can at least get a dip down to 76 to this level. If not, at a minimum, it would hit the 50. And if I take it off, I'm still going to have, a couple dollars. It's not a bad trade. So, it started to work, and then it turned around on me. And it's not anything that I did wrong. It wasn't that I was wrong on this trade. It's just that the trade did not work out. The strategy that I employed did not work this time. It's not that the strategy wasn't right. It just didn't work. It wasn't that I was wrong for taking the trade. It just didn't work. So, but then what really gets you is when this happens. Okay, here's my trade this morning. And then it goes and politely does exactly what I was looking for it to do over here. All right, so then you're saying, well, and then I'm saying, I was right all the time about what the stock was going to do. I hate it when the market makes me wrong, but I was right. And again, I'm putting right and wrong on these trades, but I'm doing it in a different context. So, I understand why I confuse you when I tell you don't look at it as right or wrong, and then I say it. I'm saying it in a different context. I'm not saying it in the context that I was just wrong for putting the trade on. It's just that, what we thought was going to happen didn't happen at the right time. Eventually it happened, but it just didn't happen at the right time. It wasn't wrong timing. It just didn't happen at the right time. I mean, that's all it is to it. But if we sit here and we say that we did something wrong, or you know what, we should have just held on to it to see if it was going to come back down. We start throwing these things in to circumvent what our rules were. That's when that snowball starts to build, and it starts that downhill spiral, and it gets so much momentum that we can't stop it. So we got to stick to our rules. We can't circumvent them, and that's what's kept me safe that's what's kept me profitable over the last several years. Even though the market is nowhere near as good as it was in 2015, 2014, it's just the skills that I learned and the mindset that I developed back then is paying dividends through this market. Through 2017 through 2018. 2018 was the worst summer. And, it carried me through that. I almost didn't make it out, but I'm glad that I had the foundation and the fundamentals to get through it. Now, it wouldn't have hurt blowing up $1,000 account. That wouldn't have been, it wouldn't have been the end of the world. But for me, doing it in front of you guys and you seeing it every day, that might have been a hard pill for me to swallow. But I'm going down the wrong road. That's it for me today. We ended up down 130, 132. So I managed my risk on this one trade. And I still stand by my decision to click it this morning. You really didn't see, after it popped up and, all of these moving averages just kind of closed up a lot of the gap. It just made the trade too crowded. So if I saw this tomorrow, I still wouldn't take it because it's not the setup that I like to trade. The market, the feel in it wasn't there. And look at the lack of volume. So, to me, that would have kept me out. So, when what you did, I just never re-engaged in the market. So, you guys have a great night, great evening, and I will catch you first thing in the morning.